Hey traders, welcome back to my channel. My name is Desmond Samuel and I am back with another episode of our weekly Forex Forecast. The first pair on my list now is the euro dollar. We actually came into some very decent supply level here and then we actually just tanked all the way from there. This is very normal. The market will always react, from level to level, and then you also need to take into consideration what the overall trend is. So on the euro dollar now, following up from where we stopped in our previous weekly outlook, we actually came on here and then I said to you guys that I was anticipating that the market would come in here to kind of like retest this supply level that I had created here, which happened to be the neckline of this double top right here, which was somewhere around here. So I was anticipating that the market would come in here, then test it properly before I actually continue to the downside. And then well, the election happened and then this was that election spike and then the follow through. So now from as things look now, it is quite evident that we're actually, potentially we could continue lower into this blue bar here, which happens to be this key level here. So once you scale up to your weekly time frame, this is exactly how it looks. Okay, so we are potentially dropping back into this demand level or this weekly key level right here. So now what do we do in the coming week? How do we capitalize on this? That is bottom line here. So it is very simple. Just get down to a daily time frame. Now we'll actually take note of this other supply level that the market reacted off of here, which is somewhere around here. Okay, now if I extend this guy to the downside, if I look into the left hand side, I can see that this was once a supply level here. So this is a supply level here, supply level here. So most likely the market will definitely come back here and then test it before actually continue lower. So my trade call is this, and I need to see the market pull back into this level here, pull back into this bar right here, and then we'll actually continue lower. So my prime target for this guy is very simple. We actually drop it all the way down to this blue bar once this retest is confirmed, and then continue, provided that we actually reverse from here. So if for any reason we actually happen to break above this supply level here, then this whole trade call will be invalidated, and then we could actually have some more room to the upside. However, as things stand, this is the most immediate supply level here. So what I'm looking for is a pullback. So I need to say pullback into this bar right here. Once I see that pullback, we are actually going to continue lower to this blue bar right here. All right, so that is that for the euro dollar. I see no reason as to why that shouldn't happen. Let me see if we have some trainers to play with, because this market sometimes loves to go and fulfill some technical levels that you and I may not necessarily see at the meantime. So let me see. We don't necessarily have any trainers to work with here. Nothing really at the moment. So this guy is looking like he's gonna drop all the way back to this blue bar here. So what you need to do is you scale down to your 4-hour time frame and let the market pull back into this point of supply here. Once it tests and bounces off of that supply level, then we can actually go ahead to execute this guy. All right, so my prime target remains this blue bar here. All right, so now the next pair now on my list is a pound sterling. So the pound sterling on the other hand, it hasn't really broken below any significant levels yet, although it is showing signs of weakening at this point here. But if you look at things from a weekly point here, you can actually see that this is still testing the neckline of an inverted head pattern. So this guy has the potential of continuing higher. Now I know you might be thinking correlation, that why am I talking about this guy going higher or maybe pausing from here when the euro is dropping. Now you need to understand that it is not every time that the market actually correlates, that the market correlates. All right, you could have the euro sky going sky high while this guy is stalling or maybe collapsing. So at the end of the day, I need you guys to understand that these are different countries, different economies. All right, so as you can see right here, so this is the pound sterling here. So we had like a decent rally to the upside, at least some form of a decent rally to the upside. And now as things stand here, we came on here to create a head inverted head shoulders pattern. We have the head shoulder here, and then this is the demand level that both head this guy all the way to the upside. Now we've spent a significant amount of time here, which happens to be 3 weeks here. So what week 1, week 2, week 3, we've not even had any decent break below here, and this is a sign of slowing down here. And whenever you have the market coming to a level and then slows down like this, potentially you could reverse to the upside. So what am I saying here? So in essence, it's very simple. So all we need to do is watch out. Okay, so we just keep watching, because now this is going to be the deciding point for the pound sterling as far as I'm concerned. we could actually continue higher or break below. So if anything that makes us break below this yellow bar here will lead all the way back to this blue bar. However, as things stand here, this is sitting right on the demand level. Demand level that voted this guy up, and then also if I look, let me see if there is some form of past demand level that the market has actually respected in the past. Yeah, so the market is sitting around a very decent demand level that the market has actually reversed. So currently we are around this demand level, and historically when we hit this point we actually reverse to the upside. So I'm not saying that that's going to happen, but that's most likely going to happen because when it comes, because I need you guys to understand that when it comes to the demand and supply level here, you need to take into consideration how that level has acted in the past. All right. If the market has had issues breaking below that point in the past, it most likely have the same issue here because history tends to repeat itself when as far as this forex market is concerned. So long story short, here we had like head shoulder pattern here. So this is more or less the testing of the neckline. And so far so good. We had like two different indecision candles here on the weekly time frame. This is a doji here, seated right on the demand level. So now this is not a sign of reversal or continuation to the upside. I'm just saying that this is still a point to take seriously, a level to take seriously, because anything that happens here could actually decide the fate of the pound sterling. Once we break below this yellow bar here, we have space all the way to that, so we bleed all the way back down. However, if for any reason we actually happen to stay and then this level holds, what we could then see is a descent rally all the way back up. All right, so which everything still coincides with the trend, and then technically speaking we are still a medium term bullish. Okay, now this doesn't change the fact that overall we are bearish on this guy, because once you consider the monthly time frame, the overall flow is still bearish. However, as things stand here, and as far as this level is concerned, this is where I need you guys. Although we have put in a monthly bearish engulfing candle here, which is also a point of concern. But as things stand here, this is the deciding factor. Once if we're able to break below here, then we'll have space all the way back down. However, if this guy holds as he's currently holding here, we could actually see this guy reverse all the way back up, because this is where this market has reversed from recently. All right, so it could happen again, and this was exactly how it happened. A bearish engulfing candle followed by an indecision candle, then followed by a bullish engulfing. In this case, this is exactly what's happening again. So what we have to do is just keep watching this guy closely. Let's see if there will be any new developments here. However, if for any reason on the monthly time frame or any time frame we actually bleed, once we break back down below here, then this whole thing that becomes a fake out. And you guys know what happens to fake out. So once we see a fake out, the market always bleeds or it moves in the opposite direction exponentially. All right, so this will just invalidate the entire bullish setup here, so as far as I'm concerned, because this also came into a supply level and then reacted off of it. All right, so in our subsequent videos, I think I'll start talking about how to trade supply demand like a pro. But right now, I haven't had the time to actually sit down there and then do that. All right. So for the pound sterling here, it's very simple. This is the bar that we actually need to watching closely. Once if anything happens to this bar and then we just happen to break below here, then we'll have space all the way back up, all the way back down. However, if we see any decent bullish engulfing candle right bounce off of here, maybe a counter trend and break like so. So this will now expose this guy headed up. So my as far as the person is concerned, I'm still very I haven't done anything yet, so I'm just waiting. So as far as the pound sterling is concerned, I'm actually sitting on my hands, waiting carefully and patiently. Once I see that break or that particular signal that this guy is about to go higher, then I'll come and I'll let you guys know. All right, so that's just that for the pound sterling. Nothing much here. All right. Next pair now on my list would be the pound card. I call these guys to the upside, and you guys know that if the pound sterling is weak, this guy will most likely be weakened. However, we are still en route to our take profit point, which was this weekly high here, which I called these guys some time back. So which is this weekly high. However, the market just seems to be stalling around here. All right, so and you need to understand that from distance between from entry to exit point here, and things you have levels in between, right? So the market could get to any point and they decide to kind of like catch it, but it doesn't mean that the chain is dead. So we have like levels in between entry and exit point. So the market could get in. So we have zones in between the entry and the exit points. So the market will get to any point and decide to catch its breath. does not mean that the market has changed direction or the trade setup is invalidated. You need to understand that market moves from one level to one level. However, in between these two levels, you have demand and supply acting now, right? So these are usually like the lower time frame demand and supply that will not necessarily change the direction of the market. All right. So my parameter target for the pound card or still remains this green bar right here. And then if for any reason we actually break above there, we have enough space to the upside, and we have ample time. So I'll definitely come here and then let you guys know what's going on. All right. So now USD card on the other hand has broken. I believe has broken above or is still playing around the level. All right. So this is still playing around the supply level that I actually spoke about earlier on. So I mean, this guy could potentially make melt all the way back down to this point here, or we actually break above here. But whatever the case is here, the pound card, the dollar card is actually bullish, and we've seen like so much strength in it. This was the first engulfing candle, followed by, so practically we had like 1, 2, 3, 4 weeks of more bullish and an entire month of bullish candles. All right, so this is just going down around this supply level here. So whether or not this guy is going to reverse back down, it's entirely up to this yellow bar here. So if we can see some form of weakening, then this will signal some meltdown. However, with the way things look as things stand, this is not looking like it's going to weaken at any time soon, because this approaching this supply level here, the market didn't seem to slow down. However, anything is still possible, right? So until we see a decent daily candlestick break above here and close, engulfing candle break and close, then that's when we now start looking for retest all to this point before we buy up to this point. However, as far as things stand here, we could still see some meltdown to all the way back down here. So I need you guys to again just sit on your hands and watch these guys closely. All right. I kid you not, majority of these profitable traders that you actually look up to, I kid you not, majority of the profitable traders that we have today barely do anything. All right, they sit on their hands most of the time. So you also need to learn that part of being profitable has to do with you not doing anything most of the times. All right. So the next pair now on my list now would be the AUDUSD actually came into demand levels that we actually been highlighting for quite some time, and it reacted to it. Okay, and right now it is still back at that point. So you can see that majority of the pairs that we have as so you can see that the majority of the pairs that we're looking at as. So you see that the majority of the pairs that we have been looking at for some time has actually come into some very delicate levels here, which will decide the fate of these pairs. All right. So we've had like the first touch, second touch, third touch of this trend line here, but the market came into this demand level, and mind you, this was the demand level that caused us issues in 2023 whilst we were trading this guy. Then also this point again. Then so I mean, it is very normal for the market to get here and then stall. It's very normal. Okay. So now from the look of things here, let's see how things look on the daily time frame. So on the daily time frame here, we have two things to look out for. One, we could easily see this guy reverse all the way back up to this supply level here and then collapse for that, or we could see this guy break below here and then continue melting down. Now we had like the interest rate cuts that came in after the elections. However, the market seems to be reacting to it in a very funny manner. However, nonetheless, here we still have to watch out for these levels closely. So we would carefully monitor this guy. If we see any signs of a breakdown here, then this will expose these guys all the way back down to this point here, which I sincerely do not actually see that this will happen anytime soon. If I saw it to happen, however, from the technical standpoint, we have series of levels here to come back and retest. So we have some form of supply here, which was created some time back during this meltdown all the way back down here. So technically speaking, the market has to come back and test it before we actually know what the market wants to do. Because Fibonacci wise, since this is a downtrend, you can draw your Fibonacci from swing high to swing low here, and as things stand here, this is where this level or this market ought to come into. So I will not be surprised to see if we have AUDUSD, kind of like fold back up to this point here. It's very possible, right? However, in the event that we do break below here, then we have then we have some space to the downside, which I'll obviously come on here to let you guys know what I'm going. But left to me, the AUDUSD is not really my pair like that. So and already what it is doing, I don't like it at all. I don't like range trading. I don't like range trading because right now we are back in the range. All right, so I'm not really big fan of range trading because we are either moving upwards or downwards. This is just sideways. and you don't make any money this way. So the market has to decide a direction for you before actually coming here to trade. All right. So like I said earlier, whatever case that this guy presents us, I'll be back here to let you guys know what's up. So the next pair now would be, so NZD USD also has a meltdown. Practically ever since we had like the dollar rally, everything has been melting down. So let's talk about gold. So gold, on the other hand, now has been giving us some very beautiful pullbacks. Started giving us some very beautiful pullbacks. The long story short here, we have certain levels that we are watching closely on gold. Now, first things first, this is a result candidate pattern on the weekly time frame. We have the bullish candle, then this is a bearish pin bar here followed by a bearish candle. So this is a bearish reversal, a candlestick pattern here. So that is the first thing to note. Now, however, we have some levels to watch out for. So this was the first level at 680, and then 2006.50, and then once we clear that place, then we have space all the way back to our 2500 region, which happen to be our initial target for the pullback. All right. So as things stand here, we have a trend line that we could be working with here. We just have to connect the most immediate. So where this trend started from. So this was that demand level that this trend started from. So this is the low, this is a high, low, high, low, high. So let's just go ahead and connect the bottoms and see if there's something we can get out of here. So we can see from swing low to swing high here, you can see that this is making sense. All right, so the market could potentially come into regions of about 2006 or 2500 dollars per ounce region here. Then a retest of this whole level here will actually give us an idea what this market wants to do next. All right, remember that this was the demand level that I was speaking about earlier for some time, where the market just failed to pull back into. So now we have another opportunity. Okay, let me see if this matches with my fib tool. Let me see if this guy matches, because I like to use my Fibonacci for every single thing. So yes, it does. So we could easily see the gold pull back into 2,500 dollars per ounce region here. Once this is said and done here, we see a decent bounce off of here. Gold is still getting to $3,000 per ounce. This guy will most likely come into this demand level and then reverse. Okay, so anything is possible at this point, but I'm banking on the guy dropping all the way back down to $2,500 per ounce. And once this is done here, we could actually see some more room to the upside. This is yet another opportunity for you to get things right. Okay, so the next pair, so my prime target for this pullback here will be $2,500 per ounce. And once this is said and done here, we have space all the way to $3,000 per ounce for gold. All right, so next up here is silver. So for those of you guys that have been with me for quite some time here, you've practically seen me call out silver right from $26 per ounce all the way to $35 per ounce, which has literally been the highlight of the year as far as I'm concerned. The bottom line is to just find a pair that is about to trend for maybe about 300 to 500 pips, even 1,000 pips, and then find a decent entry and ride that guys all the way from start to finish. All right. So that's the concept. So now for silver, we could actually we have actually come into some very delicate levels here, which happens to be a demand level. Okay, demand level, third trend line bounce, and then also Fibonacci play, if I'm not mistaken. Yeah, so now anything could happen at this point here, because this is a very decent level to look for buying opportunities. So what you need to do is very simple. Come on the 4-hour time frame here, look for any kind of like bounce, any kind of bounce method here, or in this case, since the market is flagging, you can actually look for a counter trend line break. So what we need to see is the 4-hour counter trend line break above here. But this is a very decent entry point here. Again, everything aligns perfectly. You have the Fibonacci, you have the trend line bounce, you have your demand level. All right, so what we need to see is a 4-hour candle break above here. Once you see that break above here, okay. But as far as this market remains on this trend line, it is advisable that you allow the market to do what it wants to do. Only trade when once you see a decent break above here, 4-hour candle break above here, then it will be very good for us to make entries in. All right, so entries we made once you see a clear break above this trend line here. So my next level target, if this some breaks out of this counter trend line, will be $35 per ounce. And once this is clear, you will have space all the way to $48 per ounce, if and only if this bar here gets broken out. All right, but considering the fact that gold will be rallying into $3,000 per ounce, I see no reason as to why this guy will not rally into $48 per ounce. All right, so that is that for silver. And peradventure, we have maybe a surprise turnout where you see the market break below here. Instead here, this will now expose us to drop all the way back down to this demand level somewhere around here, which is somewhere around this point here, around $28 per ounce for silver. Right. So long story short here, I favor this guy to the upside to the tune of 80%, and then to the downside, by to the tune of 20%. Anything could happen, and then we can actually see this guy spike down, then continue lower. But from technical standpoint here, we could actually continue higher on this guy, but the deciding factor here will be the break of the counter trend line. All right. So the next pair now. So the next pair now is the S&P 500. So I came on here to let you guys know what I've done on this index, and then I said to you guys that we had created some form of demand here. I was waiting for the market to pull back into that demand level, and we bought it out of there because this was where the market was coming into anyway. So kudos to those of you that actually went ahead to take the trade. So this is one of those trades that I call out, which, like I said, I urge you guys to always come back and watch these things again, because you're going to learn a valuable insights here. So the market had actually created a demand level in the past. So I was like, if I thought this market is going to continue higher, we have to come back and retest this already created demand level here. Let us go higher and validate it, and that was exactly what the market did. So it came on here, tested it properly, bounced off with immediate, like it bounced off with so much momentum to the upside, guys. So if you had missed this trade, well, it is what it is. But this guy was caught out here. If you doubt me, you can always go back and watch my previous weekly, the most recent weekly forex outlook on this channel. All right. So long story short, here we've actually bought it through. The first level target was here, and first take profit is hit, and right now we are actually traded at $6,000 per 6,000 basis points. Now my prime target remains 6,400 basis points. Do not get me wrong, we are actually say headed higher to 6,400 basis points, somewhere around this level here. All right. So but what needs to happen is that the market needs to go on higher. So if you had missed your entry here, so these are the issues now. Let's see if we could even get a pullback. I doubt if we might get a pullback to this point, but if we will get a pullback to this point here, then that would work perfectly for the two of you guys. So I doubt if this will happen, but if you can get a pullback to this point here, then that will work perfectly for those of you guys who actually missed the earlier entry. All right. So let's see if the market will go ahead and create some form of demand level right around here. But you need to also understand that whenever I give a pair here, go back and do your research. Look at things closely. If possible, record the screen and then go back and rewatch it over and over again, so that you know exactly what you're looking out for. So this guy caught a lot of people by surprise, because I think this was election morning or thereabout, the election result morning. All right. So long story short, here we actually hit first level target, and we are en route to hitting my 6,400, which is around here. Now you can always capitalize on this back. Like I said earlier, come on the 4-hour time frame or any time frame, look for immediate. Okay, so the demand level was actually created here on the 4-hour time frame. So wait for this guy to pull back into 6,000 regions of 6,000, 5,890 regions around here. Then you can actually strike this guy. So my prime target remains 6,400 basis points as far as S&P is concerned. Now, if you doubt me, go back and watch my previous video. I call out these pairs like easy peasy. All right. So now if you'd like to learn and see how I do these things effortlessly, like so, it is very easy. Just hit me up via email. The email is there in the description of this video, or just come to my Telegram community and enroll for the course. It's very simple. All right. So the next pair now on my list will be NASDAQ. NASDAQ also had the exact same move to the upside. Both we gave us a lot of pips. All right. So and that's the thing with the index. Once you get it right, you're good. All right. So long story short, we've actually hit our first level target, which was $21,000, 21,000 basis points. All right. So as things stand here now, we're actually en route to hitting our prime target, which is around 22,800 basis points. So for once again, for those of you guys who had missed the early opportunity, so what you need to do is very simple. Just wait for the market to come back and create a demand level somewhere around here. Wherever that demand level gets created, I'll let you guys know. It usually happens like a cluster of candles, then an impulsive move. Cluster of candles and an impulsive move. So that's what you need to look out for. But as far as things stand here, we're actually en route to my 22,800 basis points as far as NASDAQ is concerned. So let me see now. Let me just take you guys through, or should I do it or should I not do it? Anyway, long story short, I have been bullish NASDAQ since 2020. I think 2022 or thereabouts, or 2023. early to 2023, I've bullish this guy. Now, if you really want to know, since when I've been very bullish on NASDAQ, it is as early as January 2023. Okay, I've been bullish on this guy right from when we were here. We bought it all the way through, and you can see that the market created a series of demand level, then came out to test it before continuing higher. So in this case here, we could pretty much see a pullback into any of the created demand level before actually continuing higher. So my prime target always remains 22,800 basis points for NASDAQ. Let me see if we can connect some trend lines here. Yes, we can. So this was where the market came into. All right, it came to test this trend line here, and so far so good. It's actually reacting perfectly to it. So first touch, second touch, third touch, and around fourth touch here. So far so good for over a year now. This trend line seems to be holding quite nicely. All right, so our next concern is how this market will actually give us another entry opportunity for those of you guys that actually missed the first one. All right, so you need to watch this guy closely. Watch out for any new development. Then also click the subscribe button of this channel. Turn on the bell icon so that whenever I come over here to drop a video like this, you'll be among the very first few to see. That's how you increase your chances of catching the best trades. All right. So the next pair now. So long story short, here we actually en route to 22,800 basis points for NASDAQ. Okay, so the next pair on my list now is BTC. So I highlighted BTC pull back into the $66,000 per coin region, and that was where the market came into and bolted up. So as things stand here now, the market has given us a new high. Now it didn't only give us a new high, but it gave us a new high in form of a chart pattern, which happens to be an inverse head and shoulders pattern here in this case. Now measuring and creating this total pip count from here to here. Now let me see how things stand. So we could easily rally into 100k and beyond. Okay, we could easily rally into 100k and beyond, practically maybe 104k, but I like to leave it at 100k because that is a rounded figure, and that is a huge figure here. So this could be a bonus contention right here at the 100k mark. All right. So what we need to see now on the daily time frame is very simple. Like I said, supply and demand. See, once you learn how to trade supply and demand levels here, your stress is pretty much taken away. Okay. So what you only need to look out for is you always wait for the market to give you a demand level. Let it create a demand level or a supply level, wherever, and then the market will always come out to test it. All right. So in this case here, we're actually breaking out of this range, and then this is looking like it's headed higher. So in this case here, watch out for any pullback on BTC, and then make your entry. So my overall level target for BTC is $100,000 per coin from here. All right, so we could maybe see one more leg down before actually continue higher. So just look for any decent consolidation somewhere around here instead of this level around here, and then execute your trade and then hold for long. So BTC boys are about to smile again. And then for those of you guys who are actually into future trading, this is the time to grab my course, because I also teach you guys how to trade crypto on Bybit futures or Binance futures. All right, so that's that for BTC. Long story short here, potential target for BTC is $100,000 per coin. Let's talk about the yen pair. So the yen pairs on one hand has been one hell of a slow move. It just keeps going off and on. So like I explained earlier here, this is just the principle of supply and demand happening around here, where the market creates a demand level, comes back to test it. So in this case here now, this is the demand level that was created on this pair. So the market could easily be coming into testing it perfectly before we actually continue higher. All right. Now let me see if there's any issue that we should be mindful of. Nothing yet. So this is just coming in to test the decline of this chart pattern here. Once it's really tested and then we have a nice reaction, we can actually continue higher. And with the euro dollar weakening, this is also going to affect this euro JPY pair. All right. So long story short here, this is the deciding point at around 162 region here. Once we see a decent balance and bounce off of here, we will actually be continuing our journey all the way back up. All right. Provided that this level holds around this bar here, around 62 price point. So pound yen also has a similar so the pound yen also has something similar going on with it. It's very simple. Once we need, so the market would easily be coming into maybe some technical level somewhere around here. So once this market comes in there, we could actually see some momentum to the upside from there. All right, so it's very simple. The market creates a level, comes back to test it before continuing higher. So we could actually maybe pull in deeper to this point here, maybe to 192, maybe to some regions around here, and then continue higher. Now what is actually reversing this guy is this supply level here. This was the supply level that the market came into. All right, so the market is always going to react to levels. All right, so this is just a reaction. It doesn't change the overall course of the direction. All right, so on a weekly time frame, we are still bullish, monthly, weekly, daily, whatever time frame you look at it. Okay, so my prime target remains 208, 166. We have to to 216 here. So for this other pair, okay, so for oil now, so for crude oil just seems to be ranging at the moment. I have been calling crude oil to the downside, but nothing much has materialized as far as I'm concerned. And the reason why that's happening is because we are sitting on a very delicate demand level at a very strong point that's held over the years. This is 2021 to 2022, 2023, 2024. So this is solid 4 years of demand level here. So and the market has in recent times or in the past years, when the market came into this demand level here, the market actually reversed to the upside. So anything could happen at this point, okay. But however, bear in mind that the Middle East crisis are still, on. So let's just see what happens around here. Should this guy break below here, we'll have this guy melting all the way back down to regions of about let me see the most immediate demand level, which is somewhere around here, regions of about $35 per barrel. And then should this guy hold, we could actually continue higher all the way back to our recent high here, which is somewhere around 12 or 119 $120 per barrel for oil. All right, so we are in between two very solid levels here. So what we need to see is wait for a reaction. All right, so the next panel on my list would be the let me see which other one has potential of making us money. Okay, so the DAX, the German 30 index also, I call out these pairs. Now this is why I always urge you guys to always come back and watch this video. Always come back and watch them. Always come back and watch it. You will always learn something. All right, it's always the things that you think that you know that they will come back and gain clarity on. I kid you not. So making a habit to always come back and rewatch my weekly outlook videos, no matter anytime. In fact, even after the trades have played, I'll come and watch it again. Like look at the trade build up. Why did I call out that pair? And what made it happen the way it happened? All right. So long story short, as far as DAX is concerned here, we are still seated around this demand level here. So I think this one even has a potential of giving us an earlier entry. Okay, so in the event that we break above this bar here, this will give us enough chances to actually execute a trade at the actual positions. All right, so long story short, we are still in between here. My target for this guy is 19,691, which was the recent high. So once this is hit here, we have space all the way to 21,000 basis point for the DAX index. I see no reason as to why this shouldn't happen. But what we need to be looking out for is a breakout out of here. Once you see that break out of here and that demand level is as we created again, then we see space all the way up here. All right, so then peradventure that we do actually do the exact opposite, because the market at the end of the day will do exactly what it wants to do. So peradventure we see an opposite of what we're actually expecting here. This is the most immediate demand level. So whatever the market does, man, just know that you're going to make money as long as you're glued to my channel. So and if you found value so far, I want you to just go ahead and subscribe to my channel, leave a like and comment, and then don't forget to share the video, and then let me know what you think about it in the comment section. All right, so if we break below this demand level, we have space all the way to 18k 18,300. Okay, so from demand level to demand level, so demand level to supply levels, that is how it works. All right, so bearing in mind the trend though. So the last pair now, let's talk about the yen index. The reason as why we are seeing this whole pullback here is very simple, guys. Once you create a chart pattern and you break a level, creating a supply level, market will most likely come back to test it, or come back to test the most immediate supply level. So in this case here, this is a level here. Okay, this is a level here that the market is coming into, and then this was a past supply level. So it is very simple. The market will always come back to test previous levels. All right, so this does not change. So this does not change the overall direction of this guy. We are still bearish on this guy, heavily bearish on this guy. In fact, we are still in routes to our 688 region, somewhere around here. But sometimes the market comes back to test a level that had already created, or what's it called, to okay, so sometimes the market goes to revalidate some technical level that we haven't even seen, or we haven't even thought about. So that is that. So for the yen index here, the market is just coming back to test some technical levels before actually continue in a direction. So it could be to this point here to 746, then actually continue all the way back down. It doesn't change the overall direction. We are still very, very bearish on this guy. So the last but not the least now would be the dollar index. So next pair now is the dollar index. So the market is actually coming into supply levels, all right. So this how things look for the dollar, all right. So this is how things look for the dollar index. We've rallied into very, very solid supply level somewhere around here. So ideally it is entirely up to this level. If this market breaks above here, then we know that we are back up, and then we actually continue all the way up to our prime target, which was 115 region before. And if for any reason we actually fail to break above here, then we start to melt back down. We have space first of all to our regions of about 102 region. So once we test this bar here, we could actually continue higher. However, as things stand here, we could even melt back down. It's entirely up to the market at this point here. So what will decide this direction here is very, very simple. This 105 region. So if this 105 region gets broken above here, then we would definitely be looking at our initial target, which was about 115 region around here. So with that, we have come to the end of this episode of our weekly Forex forecast. Go ahead to leave a like and comment, turn on the bell icon as you subscribe.